Bitcoin has been struggling to find support after breaking new lows, as we talked about in yesterday's video. And in today's video, we're going to be looking for clues across the higher time frames to indicate for us what is most likely to happen for the price next. Welcome to Bitcoin Escape Plan. If you enjoy the analysis, then leave a thumbs up and subscribe to the channel. And if you want a personal reminder of the levels that matter most every day in your email, then go subscribe at bitcoinescapeplan.com. Let's get into the video. So as you can see right there, we're starting to see a little bit of positive momentum. So just keep that in mind as I am recording this video. So that's what's happening on the 4-hour time frame, as we are trying to break back above the 4-hour SMA, really for the first time in a while now, since we've initially seen this weakness of the retest of the bottom band of the Elder VWAP. If you don't know what that is, go over here to courses and I explain that in more detail. We will talk about that more later on in the video. Let's go get our daily close. Our daily close yesterday was 59.5K. This is after sincere rejection of the daily SMA back on the 23rd. And then we've just been in a continued downtrend here, and it's looking overwhelmingly bearish. The only point of evidence that we have for some bullishness is these horizontal lines that I've drawn. This is from 2021. This is the first all-time high. This is 2021. This is the second all-time high. This is 2024. This is kind of the middle range of 2024 after the initial spike, after the ETFs were bought up. So if we look at those represented on the chart, you can see over here on the monthly time frame, this yellow one here is basically, the story is we go to new highs, we come back down, we break it initially, and then that's where the candle decides to close. The next two candles decide to close right at that level before initially finding lower high and then starting to form weakness. This guy over here, I didn't set a new one because to me, that is close enough to getting confirmation of this level here. That basically what that meant was that those candles found support above this 2021 level. So this is novel enough for me to draw a new one. This was not novel enough for me to draw a new one. This is the 2021 highs as well. So that's kind of what we're looking at. Is I talk about this in the newsletter. Again, go to the website if you want to read the full thoughts on that. But we're dealing with the psychology of individuals who either bought at the top. Those are the people who bought at these levels. There's not a significant amount of time at these levels. So we're at these levels for a very brief period of time. And then we have the ETF buyers who, again, they either got in right at the beginning, at the end of December, and that, I would assume that's a relatively small cohort of the people who were involved. And then anyone who got in the February rise saw that peak in March of 2024 at 73.8K, our beloved 73.8K level. All the subscribers know I love that one. That became the most important psychological level because it was the first time that we've broken a new high in a halving year. This is very important. This has been a huge clue for us as to how the price was going to behave last year as well. This is a big reason why I didn't think we were going to see a huge blow off top. I mean, me, just like anybody else, I was hoping we would see 200K, but I had 130 to 150 written down back in 2022. And that seemed very likely to me that that's where we were going to start to see weakness. And of course we did. We saw it at 126. So what we're seeing again is a psychology of these individuals who are either late back in 2021, but who have had time to either completely get out of the market or to start loading up in the lows of 2022 and 2023. So these people over here are prepared. These people are seeing these levels and are thinking, oh wow, this is where I originally got in. You know, anything lower than this is awesome. That helps me a lot. I can buy more. That's the psychology of the older, you know, these are people who have now been through probably 2 market cycles. You know, obviously they're late if they're top bios for here. So I don't know if I would count that as a full market cycle, but they have this full market cycle and we are starting our next one. So those people probably have stronger conviction than these ones over here who largely, this money is in their retirement accounts. This money is managed for them in ETFs. They're not as concerned about these swings in Bitcoin, and it's going to be the managers that are doing it, and the managers are not going to care about removing 1% of a position or reallocating 2% of a position. They don't care. They're just going to go based on the math. And the math is telling them right now that stocks and real estate is more appealing than Bitcoin. But you, subscriber of Bitcoin Escape Plan, you know this is a ruse and that you need to pay attention to Bitcoin when it is boring. So let's look at our points of evidence for why my overall claims on this channel, I believe, are still in play. So my largest claim, and this is important because we have our weekly close tomorrow, my largest claim is that I believe we are going to see a lower high form in the month of July. Why do I believe that? Well, I believe that because in a bear market year, subscribers already know this, we have typically between 3 and 4 green candles. We already have 2 green candles. That leaves us with how many? 1 to 2 more green candles. So over here, we got 2, 3, 4 green candles. When was this green candle? It was in July, after a serious drop off, April, May, and June, very similar to what we have also experienced, although I believe we had a bullish April, not a red April. But same thing, we had 2 green candles. Ours are just slightly pulled over to the right in this particular instance. And in 2018, very similar, where we had a drop off May and June. This is almost identical. And then we have our July lower high form. This is the point that I find most interesting, is I'm not actually sure if I believe the body of the candle for July is going to end up closing higher than the body of the candle for June. And we will need to be, that will be important essentially for how high. This guy went to $8,449. Yes, that's not how you do math. $8,489, Jesus. 85K if you add a 0 to it. And that is why we were basing our analysis of originally, I believed we were going to tap 83K. I called this out back in February, specifically because of the middle band of the downtrend anchored VWAP. That is what allowed me to predict that like 3.5 months before it happened. The difference being, so that, again, that's our May interaction, but our May interaction over in 2018 was closer to 9,600 at that time. So that is our January interaction, is closer to 96,000. So really what I'm paying attention to now is going to be that next lower level in 2018. Same structure. I'm still expecting a lower high to form, but I would actually be expecting it to be more like one of these guys. I guess probably the September one being closer to 7,400, which falls exactly in alignment with the level that I just talked about earlier, 73.8K. Again, psychologically, one of the most important levels on the chart. And my overall belief that even if we do see a rise into July, which again, I think is overwhelmingly just more likely, I'll go over the points of evidence on the weekly chart in just a moment, but I think it's overwhelmingly more likely that we see some, return to the upside after such a large body drop than continued downside pressure here. I know that's what a lot of other channels are talking about right now. I am willfully ignoring all of these channels. I'm not watching any other Bitcoin videos right now because I'm concerned that the same thing is going to happen as in May. I had to stop watching other people's videos because everyone was talking about how we were going to 100K and I knew they were wrong. So I had to stop watching other people's videos other than like 1 or 2 other channels. Guys, let me know in the comments which other channels that you watch. That would be helpful for me to kind of understand what type of analysis you find valuable and what type of analysis you're listening to that is terrible advice. Anyways, so that is the basis for my analysis, is that I think we are going to start to see strength primarily just because of the overwhelming amount of weakness that we see on the chart. We see, I think it's like 5 or 6 factors of objective weakness on the chart. So let's take a look at it. So right now, our most recent, most important thing on the chart was this failure of the weekly SMA. So that is super important. That's long enough ago that I'm not going to count it as like a like the most important event at the moment, but we have to keep in mind that we are below the weekly SMA. When we are below the weekly SMA, what that means is it's a good opportunity to DCA. You may have to be patient because we can still have spikes above the SMA again. However, typically speaking, we would expect it to stay below the weekly SMA for the majority of the bear market year, and really would not expect to flip until early into next year, or maybe October or November of this year. But regardless, the majority of the year we would expect to be disconnected from the weekly SMA. It is important to note this is the second longest time period that we have been above the weekly SMA during a bear market year. I was talking about that a lot as it was happening. And there was some credence for us to be able to gain strength above that level again, but as soon as I saw weakness on 76.3K, that is where I went short and closed 160% in profit on that trade. Pretty stoked about that. So point number one of weakness, we are below the weekly SMA, check. Point number two of weakness, we are below the point of control at 67.5K. That is the point on the chart where the most human beings have pressed buy or sell. I already went over that a lot, talking about the 2021 and I guess actually that's primarily more 2024 because we didn't actually, I guess we did. We rose. That was the second all-time high in 2021. It's technically higher than that, but it's a brief touch then. So psychologically, what the market is experiencing here is, again, that's the most people who pressed buy or sell at that level at 76.5K. So it's them seeing weakness there, and we got rejected at 76.2, I believe, 76.3 maybe. Sorry, I'm saying that backwards with dyslexia. 67.3 is the highest that we got at that level before, again, showing failure. And that is where I re-entered my short and ended up closing an additional 70% on that short for a total of 230% to the downside during this move. Not bad for 1 month's work, where all I really did was talk about the chart with you guys once a day. So those are two major points of weakness. Check. The third major point of weakness, this is the downtrend anchored VWAP. This is the bottom band of the downtrend anchored VWAP. These are magnetic forces. That's how I like to think about these guys. When we get close to one and can't touch it, the price is going to react very, very negatively to that. And we'll see that more at the very end of the video. I'll go over that for the 4-hour time frame, why I believe that we've already seen the local bottom now and that we're actually going to see higher moving into the month of July. So that's our third point of evidence, is that we showed weakness. After a retest, again, of the point of control, we showed weakness and a close below the bottom band of the downtrend anchor VWAP, which of course has prompted us to go further down. The fourth point of weakness being the 64K Fibonacci pivot in general. Now, this is a range that I talk about all the time. Subscribers are well aware how I feel about 64K to 76.3K and the midpoint there of about 70.3K. The way that I think about this is 70.3K is functionally kind of our like midway point of understanding, okay, if the price is above that, it's more likely to retest 76.3K. If the price is below that, it's more likely to retest 64K. And what we have now entered, since we have broken down to the bottom of this range, we've shown that we don't have enough strength to stay above it. I do believe we get one more test to see if we are able to stay above it, though after further research, it's hard for me to believe that the wick is going to be higher than about 73.8K. I don't think it's even going to touch 76.3K anymore. I think it's more likely it's going to fail at 73.8K. Higher psychological bias puts us more down to the downside after that initial rise in July. So the only other point of evidence, that's four points of evidence that we have, overwhelmingly bearish, and then we just had an interaction with the bottom of the weekly Bollinger Band. Now, anyone on the channel who follows my scalping strategy understands, technically speaking, that's a long signal. Whenever we break the bottom, technically speaking, that is a long signal. That is true over here. That is true over here. That is true in most instances at this stage of the cycle, is that technically speaking, that's going to be a short-term trend long exposure. Now, I don't take trades based off of the weekly time frame. I take trades based off of the 4-hour time frame and just the broader trend analysis. But that is super important that, again, we have 5 signals of overwhelmingly bearish pressure just in the last like 2-3 weeks. So for me, it's completely reasonable. I understand why these other channels are telling you that we're about to break down below 50K. I've gotten so many comments about that on threads, about people telling me that I'm wrong and that we're about to break below 49K and all this. And I understand, guys, I understand. In the long run for this year, you're correct. I say it on this channel all the time. I believe that the absolute bottom for this cycle is probably closer to 34 to 39K. I think that's what we touch sometime in Q4. I don't really care if it's October, November. I don't care if it's January of next year, quite frankly, because there is some evidence from the 2019 chart that that is the case, is that we actually continued to drop down through Q4 into Q1 of the following year. And Donald Trump was president during that year. So not that hard for me to believe that, guys. However, because we have all of those overwhelmingly bearish signals, there's nothing else. There's nothing else. So we just hit a new low as well. So a sixth point of bearish evidence, if you want to count that as well. You know, we don't have any signs of strength, which to me is the perfect opportunity for us to try and start building it. Which again, that could very easily be rejected if we start to get closes below this. I would say specifically more on the daily time frame. If we start to get closes that really start to head us down below that, then of course, you know, we're going to need to test if we need to break to a new low. I don't think at the moment that we're going to see that, primarily just because this is June 25th that we saw the absolute low, and in 2018 it was June 24th. You know, it was June 24th that we saw the absolute low there. And then what happened? We consolidated for roughly 2 weeks. We did not really get past about $6,400 at the time, which is why I believe, and I talk about this again more in the newsletter on the website, it's why I believe that it's unlikely for us to really test higher than about 64K between now and about the second week of July. I think it's gonna be very boring for the next couple weeks. I may have to be prepared for, I don't really think that we're gonna break down that much lower. Again, I started explaining this and then I got distracted, sorry. So now that we've entered this other range, 64K to 44K, the same logic applies, that we need to pay attention to the midpoint being about 53.5K to 54K. Let's just say 54K because it's easier. So 54K again, acting the same way as 70.3K. So if we're above 54K, cool, that puts pressure towards 64K. If we're below 54K, that puts pressure towards 44K. So again, me personally, the only thing that I would be looking forward to invalidate the fact that I'm now back in long trades instead of closing my shorts is if we show weakness at 54K. I'm not bothered if we touch 54K. If anything, I'm gonna long that. I'm gonna buy more contracts if we touch that. However, based upon, again, what we saw in the 2018 chart, and guys, it's just overwhelmingly similar. We saw the same drop in February. We saw the relative highs in May and April within like 4 or 5 days of each other. The lows in June are within a day of each other, a day, even to the point of getting 2 touches at below 60K, not 1, 2. We anticipated that ahead of time. That is how I was able to, again end up squeezing more profits out of that trade, because I was confident we were going to touch it again, even though we started to rise at a significant level then. I saw a lot of those same bigger channels talking about how we were going to start rocketing past the point of control at that point. It sucks. I used to be like everybody else. I used to watch a ton of YouTube videos all the time for Bitcoin videos, and I had to stop doing it because I don't think people are looking at the right things on the chart. So I'm really trying to just focus on the basics, which comes down to primarily understanding your monthly closes. That's probably the most important thing. That's what these lines are right here. And then I use 2 indicators, guys, nothing super complicated. I use the Bollinger Bands, the 20-week SMA, and I think it's called Pivot Standard Auto or something like that. Is this indicators? Favorite indicators. Pivots Points Standard. And then I just set it to Fibonacci and Auto. Super useful. I don't have to draw Fibonacci retracements, rainbows anymore. I can just kind of trust that indicator, and it's been great. It's how I've been able to call out this range the entire time. So again, we're looking for points of strength, specifically on the lower time frames now, to confirm whether or not we're going to start to see a flip on the higher time frames. Because again, on the higher time frames, there's nothing. There's nothing bullish. There's nothing that indicates for us that the price is going to start behaving well, other than, again, them talking about the Clarity Act and really trying to get that in before August, which I think is very thin. I think it's very thin. Like, even if that gets passed, I still think that it sells off. And if it doesn't pass, obviously it's going to sell off even more aggressively. So I personally am really not as concerned about that as I am whether or not we show weakness here. Because again, if we show weakness here, what does that communicating, that is communicating to the 2021 top buyers as well as the ETF buyers in 2024 that the price is going significantly lower. Those people will panic at that time. I'm not going to panic unless we drop significantly below 54K, and I am of the opinion that we are not going to do so, and therefore I am calmly sitting in a few long contracts and will be looking to add more of them really over the course of the next 2 weeks. It doesn't really bother me if the bulk of my weight at the position ends up being closer to 61K, because really that's what we want to see. We want to see acceptance of 61K as support instead of, right now we're still kind of struggling with it. If we go over to the 4-hour time frame, we can see that a little more clearly. Huge period of compression. I had a question from Jorge about this earlier on Threads that I said I would talk about. And really, I talk about this all the time. When we see a period of compression, it's not uncommon for us to hit both sides of the bands and for it to be very unclear for a period of time which way the chart wants to break. Now again, based on our historical analysis of 2018, we do not start shooting up immediately in July. It is about 2 weeks of consolidation into July. So really what I am anticipating, not just for the next 24 hours, but really for the next week or 2 weeks, is consolidation between about 59K and about 61K. Obviously, 60K itself being a super important psychological region, just being the equivalent midpoint. Technically, the midpoint is actually like 61.5K. Or no, that's not how math works. Technically, it's 63K. 63K is technically the midpoint from the 126 all-time high. But we're not ready for that yet. We're not ready for that. And it's really, once we have acceptance at 61, that I think we'll start to build momentum towards another retest of 64. But as I said already, based on the 2018 chart, which I am gonna keep using until it breaks, guys. Until that breaks, I'm gonna continue to assume that it has not broken, that the 4-year cycle is still in play, and that we have to go based on the heuristics of the most similar points of the chart. I saw somebody was talking to me yesterday about the 2022 chart and how the 2022 chart was behaving, and I don't care, because the chart right now doesn't look like 2022. It looks like 2018. And until such a time where it don't look like 2018 anymore, I'm going to continue to focus on that part of the chart instead of other arbitrary points of the chart. People love to do that. And I'm sure people could argue the same criticism of me that I'm cherry picking points of the chart, but I'm not cherry picking points of the chart. I'm cherry picking the exact points of the chart that we were in at a different stage of the cycle, which is very different than like, oh, in May of 2022 it behaved this way. Cool, bro. We're in June. What are you talking about? You know, like you got to be careful about where you're pulling your analysis from of different times in the chart. Somebody was telling me about how it was behaving at the end of 2025 in relation to now. And it's like, dude, you don't know what you're talking about. How it behaves in the post-halving year has nothing to do with how it behaves in the bear market year. Bitcoin is math, not just money. So I said I would talk about this earlier. Let's talk about it now. This again is the bottom band of the Elder VWAP. This is the Elder VWAP, the one that I have drawn from the 2011. It's the same tool. It's not a different tool. I just like calling it the Elder VWAP because I'm silly like that. It's under volume based over here, anchored VWAP. I think I said anchored volume profile in the other video. This is the anchored volume profile. It tells us very different information, but the anchored VWAP is what you want. You drop it on a candle, and then it tells you everything that you need to know. I dropped that one again on the 126 all-time high, and then this one is drawn from the lows in 2011, which is a little bit different on every chart, but super, super helpful. This tells me the pressure of the price to the upside. This one tells me the pressure of the price to the downside. So because we just had what I would define as a favorable interaction there. So we had a wick all the way down to it. We had every reason to believe that was going to happen. You know, I was talking about this all the way back in whatever, the end of June. A week ago, 2 weeks ago, I was talking about that we were getting pulled towards this direction. So I wasn't really panicking when we hit 58. That was, again, I believed that. I entered another short trade after closing my other short trade because I believed that was a possibility. But that same candle, we saw that candle not only close above, again, this is the lowest, or rather, this is the closing candle of May, April in 2021. Very important psychologically to be back above that level. And it closed as well above the 59.1K Fibonacci pivot, which on the lower time frames is one of the more important ones. I'm not going to say it's as important as 60K. I'm not going to say it's as important as 64K. However, specifically on the 4-hour time frame, it is really important, and we are seeing significant support above that level. Look at all these candles, guys. What do they all have in common? They have all closed above the 59.1K Fibonacci pivot level, even if they've broken it. We had this literally as I was writing the newsletter this morning. We were below it, and I was having to really take into account, okay, well that would partially invalidate this move. That would indicate further downside pressure if we were to have the body of that candle close down here, and we didn't. It rose all the way up here before closing, and then obviously as I'm recording, like I said, we are starting to see local movement to the upside. That doesn't mean that it's not about to get rejected immediately, but what we want to pay attention to going into tomorrow's video, I'll go over this again then, and every day. Make sure you're subscribed, guys. I'll be making these videos forever, I think. That's what we want to pay attention to specifically, is do we maintain support at the 59.1K Fibonacci pivot? And guys, 59.1K, it's the same thing as 59K. What we really need to pay attention to as support or weakness, or support or rejection in this general range, is 59K, 61K, 64K, and 57K. I think those are the most important. So obviously we had a retest, or not a retest, sorry, a new low at 58K that both touched the Elder VWAP, as well as I think of that as being confirmation of support at 57K, because we didn't even have to touch it. We didn't even have to touch it, and therefore 57K is support, no question. And even this, because we closed that candle back up over here, we closed it at like 59.5, same thing, comfortably confirmed 59K as support. And now we've just had a couple wicks. We've had a wick down to 58.8. This guy is 58.8 as well. This one is 58.9. So same thing. We're basically just seeing more tests to see, okay, well, is this really support or is this resistance? At the moment, 59K is support. I really believe, however, for the next probably week or two, we're going to be stuck between about 59K and 63 to 64K. Probably 63. I don't think we actually break 64 again until we get a little bit closer to whatever their decision is around the Clarity Act. We get a little bit more confirmation of whether July is bullish or bearish for stocks. And then slowly that will start to creep back into positive sentiment for Bitcoin. But again, on the higher time frames, as we've discussed in this video and every other video, overwhelmingly bearish. There's no reason at all for me to be bullish. I'm probably the only channel that you are watching that is telling you to be bullish at the moment. I'm sure most other people are talking about how we're going to break down below 50K and everything else. And they're correct in September. They're not correct on June 29th. Or whatever today is. I think it's the 29th. Anyways, that's what I'm looking for, is do we continue to maintain strength above 59K? Can we get above the 4-hour SMA, currently sitting at 60K on the nose? Obviously, we got 2 hours left in this candle. If we close above it, that's good. That puts us in a position where we can start to build momentum to the upside and start to see expansion rather than compression on the Bollinger Bands. This is important to note as well. We are seeing compression, but that guy is pretty telling that the price wants to go higher, that it's being pulled higher. So once this candle prints, I would assume we'll see an equivalent movement on the top band as well, where it will start to want to expand higher. Now, everyone knows already, doesn't mean we can't get rejected off that. And we did in the previous candle close. There's nothing that's really preventing us from continuing to get rejected. But I really think the story of now is, are we staying above the 2021 monthly closing candles? Yes or no? We are above the first one. We are below the second one until we can start to gain momentum above the second one, which may take a full week of time. That will not allow us to actually make a sincere push for 64. And again, all I can really believe for the month of July is a run towards 73.8K. And that probably is not going to happen until the second half of the month. I think it's going to be really boring. I think for the next 2 weeks, you guys are going to be listening to my videos being like, I don't know if Jacob's right. I don't know about this lower high in July. He keeps saying it. I know he was right about all the other ones, but I don't know if he's right about this one. It's going to be, I think, a tense 2 weeks where it is not clear whether we are going to set new lows or not. And it's purely going to be based upon your ability to stay focused on what matters. What matters is the 2021 and that 2024 region. Same thing here. If we start to see acceptance or rejection here, it's just going to pull us back down towards the 59.1K Fibonacci pivot. And then again, 61K is important. So basically, I think we're going to stay in 59 to 61K probably for most of the week. I don't know if it'll be the entire week. And again, all it takes is a little bit of volume to one side or the other for us to actually break that range. However, I do think that 58K is the bottom for now. I got a lot of subscribers on that video on Saturday. I should have been more clear about I don't think that's the bottom for 2026. I really meant the bottom for June. And these are daily videos, guys. I do not expect you to watch this video 6 months from now and be like, oh my God, he was right. You know, I expect you to watch it because it happens to be on your feed today. And I'm just trying to do the best I can to help you with your Bitcoin trading and accumulation. Which if you would like more help with that, you can either book a one-on-one call with me down in the description below in the Calendly link, or you can go watch that video that I have pinned at the very end of this video, the advanced Bitcoin trading course, where I explain how I've been able to hit just crazy gains. I think I'm up like 370% since March. And I spent like 3 weeks in loss during that, guys. Like it would be higher if I was better at this. I'm still getting better at this, and 370% for 3 months work is not bad. So that's what I'm looking for right now. Colloquially speaking, 59K and 61K, but 59.1, we want 4-hour candle closes above that to continue to maintain strength. We obviously want to start building momentum above the 4-hour SMA at 60K, and then our top Bollinger Band is about 60.7, and 60.8K is also very important. So if we can start to see acceptance there, that'll push us higher. I'm not convinced that we are going to see that yet. It is just as likely to me that we see rejection there, and that we really stay between 59 and 61 for a minute. You know, like that may be, I may be talking about this into Thursday's video. It may be very boring this week. That's why it's super important. Bitcoin is best when it's boring. Go watch the advanced Bitcoin trading course. I will see you guys tomorrow. Leave a comment, say something nice. All right, bye.